Hello, candidates. Today we are going to discuss about IRDAI, the Insurance Regulatory Development Authority of India, is an autonomous statutory agency tasked with regulating and promoting the insurance and reinsurance industries in India. It was constituted by the Insurance Regulatory and Development Authority Act 1999. The headquarters is in Hyderabad and it was moved from Delhi in 2001. Many prior to that, it was in Delhi. IRDAI is a 10-member body, including the chairman, 5 full-time and 4 part-time members appointed by the Government of India. Just a minute. Yeah. IRDAI, you have a website also, irdai.gov.in. You have a website like that, so you can know from that. I was just trying to find out who is the chairman of IRDAI. IRDAI's chairman is Subhash Chandra Kuntia. Subhash Chandra Kuntia is the present chairman of IRDAI. In 1993, government set up a committee chaired by former Reserve Bank of India Governor R.N. Malhotra to propose recommendations for insurance reform, complementing those initiated in the financial sector. That was in 1993. The committee submitted its report in 94, recommending that the private sector be permitted to enter the insurance industry. Foreign companies should enter by floating Indian companies, preferably as joint ventures with Indian partners. Following the recommendations of the Malhotra Committee in 1999, the Insurance Regulatory and Development Authority of India was constituted and to regulate and develop insurance industry and was incorporated in April 2000. What are the functions and powers? The functions and powers of IRDAI are defined in Section 14 of IRDAI Act 1999. That is, issuing, renewing, modifying, withdrawing, suspending, or cancelling registrations of insurance companies, protecting policyholders' interests, specifying qualifications, the code of conduct, and training for intermediaries and agents, specifying the code of conduct for surveyors and loss assessors, promoting and regulating professional organizations connected with the insurance and reinsurance industry, inspecting and investigating insurers, intermediaries, and other relevant organizations, regulating rates, advantages, terms and conditions which may be offered by insurers not covered by the Tariff Advisory Committee under Section 64U of Insurance Act 1938. What are the functions and powers? Regulating investments of funds in insurance companies, adjudicating disputes between insurers and intermediaries or insurance intermediaries, supervising the Tariff Advisory Committee, specifying the percentage of premium income to finance schemes for promoting and regulating professional organizations, specifying the percentage of life and general insurance business undertaken in the rural or social sector, specifying the form and the manner in which books of accounts shall be maintained and statement of accounts shall be rendered by insurers and other insurer intermediaries. So these are the functions and powers of the IRDAI also. Now we go into various insurance plans. What are the various insurance plans? The first is group life insurance. Group life insurance is a type of insurance in which a single contract covers an entire group of people. Typically, the policy owner is an employer or an entity such as a labor organization, and the policy covers the employees or members of the group. Group life insurance is often provided as part of the complete employee benefit package. In most cases, the cost of group coverage is far less than what the employees or members would pay for a similar amount of individual protection. So, if you are offered group life insurance through your employer or another group, you should usually take it, especially if you have no other life insurance or if your personal coverage is inadequate. ग्रुप इंश्योरेंस का मतलब ये है एक कंपनी और एक ग्रुप ऑफ एंटिटी और सब ज्यादा नंबर ऑफ एम्प्लॉयज और पीपल को देते हैं. फॉर एग्जांपल बैंक रिटायर्ड पीपल के लिए तो हम बोला कल हम लोग का मेडिक्लेम पॉलिसी है वो तो वी आर टेकिंग इट सेपरेट टर्म्स. Similarly, group that is micro group life insurance. Next is micro insurance plan, insurance that offers coverage to low income households or micro insurance. This is similar to that of regular insurance, except the fact that it targets low income people. Insurance Regulatory and Development Authority of India has created a special category of insurance policies called micro insurance policies to promote insurance coverage among economically vulnerable sections of society. IRDA Micro Insurance Regulations 2005 defines and enables micro insurance, a general or life insurance policy with a sum assured of rupees 50,000 or less, that is known as micro insurance. Next is joint life insurance plan. The joint life insurance plans or policies are designed to cover the couples or partnerships in the event of either partner's death. A joint life policy is the insurance cover that you get on a first death basis. It is a payout which an insurer receives in case of death of his other insured partner during the period. Usually, when you apply for a non life insurance company, when you apply for a life insurance company policy, you mention a nominee or beneficiary. In joint life insurance, both you and your partner will be the owner as well as the beneficiary. So, in case something happens to one of you, the other will receive the benefits of the life cover. Term insurance plan. Term insurance plan is a form of life cover. ये तो पहले हम लोग देख लिया. It provides coverage for defined period of time, and if the insured expires during the term of the policy, then the death benefit is payable to the nominee. Term plans are specifically designed to secure your family needs in case of death or uncertainty. It provides a specific amount of coverage for specific period of time. Then convertible insurance plan. These are all theoretical. Of course, you should know. A convertible term life insurance plan has an option attached to the plan which allows the conversion of the plan to an endowment assurance plan. Some convertible term life plans have an inbuilt conversion option, while some allow conversion as an odd feature. as an add-on feature. The policyholder can choose to attach this feature by paying additional premium. Next is pure endowment plan. A pure endowment is a type of insurance in which an insurance company agrees to pay the insured a certain amount of money if the insured is still alive at the end of a specific time period. Let me repeat. A pure endowment policy का मतलब ये है that you take a policy and at the end of the period, if the policyholder is alive, the company agrees to pay the money to him. There are, however, no beneficiaries to a pure endowment, meaning that more benefits will be owed to if the insured is not alive by the end of the endowment period. Yeah, so this is what it is. Now, certain, I think it's only 11 minutes over. I think I can cover about certain miscellaneous topic. Here, insurable and uninsurable risk. A risk that conforms to the norms and specifications of insurance policy in such a way that the criterion for insurance is fulfilled is called insurable risk. In case of a scenario where the loss is too huge that no insurer would want to pay for it, the risk is said to be uninsurable. That was insurable and uninsurable risk. Surrender value. Surrender value is the amount of the policyholder will get from the insurance company if he decides to exit the policy before the maturity. Surrender value is payable only after 3 full years premiums. I think that has been reduced to 2 years or so. Yeah. Now it has been recently reduced to 2 years. Maturity claim. Maturity claim is a type of claim wherein the insured files a maturity claim form. It is sent along with original policy document to the insurance company before the maturity date to get timely settlement from the insurance company. Next is reinsurance. It is an insurance that an insurance company buys for its own protection. The risk of loss is spread, so a disproportionately large loss under a single policy does not fall on one company. Reinsurance enables an insurance company to expand its capacity, secure catastrophe protection against shock losses. Co-insurance. It is what the patient pays as your share towards a claim. Co-insurance is a form of cost sharing or splitting the cost of service or medication between the insurance company and the consumer. There is some Arogya Raksha policy and all. They have a clause up to 15% we have to bear. Balance the insurance company will pay. Maybe 15 or 10%. This scheme is known as co-insurance. Bank assurance. Bank assurance means selling of insurance products through banks. The insurance companies and banks come up in a partnership wherein the bank sells the tied insurance company's products to its clients. The bank insurance model is also termed as bank assurance. Next is actuary, ACTUARY, a person with expertise in the fields of economics, statistics, and mathematics who helps in risk assessment and estimation of premium, etc. for an insurance business is called an actuary. A professional statistician working in an insurance company is an actuary. Actuarial science is the discipline that applies mathematical and statistical methods to assess risk in insurance, finance, and other industries and professions. Actuarial science includes a number of interrelated subjects, including probability, mathematics, statistics, finance, economics, financial economics, and computer programming. Third party administrators. Third party administrators or TPAs are vital link between health insurance companies policyholders, and healthcare providers. The TPAs maintain databases of policyholders and issue them identity cards and unique identification numbers and handle all the post policy issues, including claim settlements. That is, this insurance companies, they appoint TPAs to whom only the claim papers have to be submitted under Mediclaim. Lapse. The policy for which all the benefits the policyholder sees and is terminated due to non-payment of premium, the amount on the due date or even after the grace period is called lapsed policy. Lapsed means that is जो पॉलिसी का ऊपर में प्रीमियम ठीक से पेमेंट नहीं हुआ वो लैप्स हो गया, that is known as lapsed policy. Then it can be revived. Mortality charge. Mortality charge is the amount charged every year by the insurer to provide the life cover to the policyholder on the life of the life insured. It is also called the cost of insurance. Maturity date, the date on which the principal amount of a note, draft, acceptance bond, or other debt instrument becomes due and is repaid to the investor, and interest payments stop. That is known as maturity date. Agent. An agent is a person who is licensed by state to sell insurance, by the company to sell insurance. The agent serves as an intermediary between insurance company and the insured. Agents are only responsible for the timely and accurate processing of forms, premiums, and paperwork. Captive agent. Agent sells insurance of a specific company. Independent agent. Agent who works independently sells insurance of many companies. So these are some of the points that I can share with you in this. So thank you so much. In this sixth one, we have covered about IRDAI and also about different policies and certain terms also we have studied. Thank you.